Wealth builders, welcome to another real estate educational drive-by video. This video is brought to you by the Mills Funding Group LLC, an apartment acquisition and asset management company. I'm your host again, Nick Billions, your private money surgeon, and today we're talking about how to offer investors the opportunity. Here's what you place down on your emails, your direct mails, whatever form of communication that you offer to your investors. This information that you're going to place down to them and give to them in a small half-page to one-page format, kind of like a mini business plan for the property or for the project of interest. Now, disclaimer, again, like I said, this is just purely educational and based off of personal experience and opinion. I'm not a lawyer, CPA, or securities professional, and you should verify and consult this information by your attorney and CPA or whomever legal counsel you have before working with any of the mentioned investment strategies. And again, this information is purely educational and not intended to present or market any securities opportunities. For more of what we do and what we offer, you want to go to our homepage at privatemoney.ViniCompanies.com. Now, here's what you place into the offering request to your prospects. You want to place down a note request, how much the total project is going to be or how much you're going to get it for on contract, when the money is needed. That's an urgent call to action. You let them know no longer than a 90-day period that you really want to place the opportunity for. The property's address, and you want to place a partial address so that just in case you didn't have a non-confidentiality, non-circumstantial agreement signed, you're not posting that project out publicly to everyone. Plus, if you didn't get permission from the owner of the property, you don't want to place down their full address. You just want to give some of the information and not all of it, and not get into any legal quandaries or anything like that. The loan amount, and that's pretty much the amount of the loan that you're going to get based off of the equity that you're going to receive from the investors. The property value, and you want to look into the assessment office of the county that the property is located in, just give them a certain value. Or most times what people do is just place the asking price down as the property value and go from there. The LTV of the total equity is the equity that you're going to receive from the investors going to be 20%, 30%, 40, 50, or is it going to be a full 100% of the deal? You want to let them know how much equity you're looking to get into the deal. The interest rate that you're paying, you want to let them know after calculating everything down. Just do a simple interest rate of the asking price divided by the equity that you're placing down. And I think the calculation's right, but it'll come into another video if it isn't. And the interest rate that you're paying, as well as the long term. How long you plan on holding the equity's money? Is it 1 year, 2 years, 3 years, or up to 5 years? Anything from 3 to 5 is good, with a 1 to 3 year early cash out option that you will place in the agreement between you and the investor. The lien position, most equity investments, unless they're doing a full cash out, is going to be a second position. It's going to be a second position loan anyway, especially if you get any conventional institutional financing mixed in with the equity. The equity is going to be second position, just like any down payment that you would make on a typical mortgage. The program description, you want to explain what the project is, what it would do for the investors, where it's located, why you're choosing to invest in this, and what you plan to get out of the entire project. The exit strategy, you want to explain how you plan on giving back the investors their money and any future plans for other investment opportunities as well. A rule of thumb is that you never want to pay back the investors' dividends until you present them another opportunity to invest their money into after this one is done. And the urgent call to action, like I said, just like at the front, when the money is needed, you want to let them know how soon you need the money. The quicker the better. Is on a first come first served basis. I can only have so many investors. You want to add something like that in to get these investors not be so complacent and so laxed about bringing their money to the table. That's it, people. Like I said, drive-by real estate education for you at its best. Brought to you by the Mills Funding Group LLC, an apartment acquisition and asset management company. Again, for more of what we do, you want to go to our homepage at privatemoney.ViniCompanies.com. You want to like and subscribe to our Facebook page at facebook.com/privatemoneysavior. And you want to subscribe and follow our YouTube page at youtube.com/Mills Funding Group. Again, this is your host, Nick Billions, a private money surgeon. I'll talk to you soon.